Okay, let's jump right in. May 6th, 2025. You might have caught this. FOXO Technologies, that's ticker FOXO, had this pretty wild intraday stock surge.
Wild is right. It peaked at, what, 134% gain?
Exactly. Now, it did pull back to close at 77225s, but still, that kind of volatility, it makes you want to look closer.
Absolutely. A single-day spike like that, it's rarely just random noise. It usually points to something significant happening, maybe market reaction to news, or maybe something deeper changing within the company itself.
And that's precisely what we're doing today. Welcome to the deep dive. We've gathered a whole range of information, company filings, news, analyst data, to really understand FOXO Technologies beyond just those price swings.
Yeah, our goal here is to pull out the most important insights, figure out their business, their financials, their prospects, and give you a clear picture without drowning you in information overload.
So in this first part, we'll dig into what FXO actually does now, take a look at the management team, and critically examine their financial situation.
And then in the second half, we'll zoom out a bit. We'll look at how the market feels about them, who actually owns the company and holds the power, and importantly, assess the risks involved.
By the end, you should have a much clearer, more informed view on FXO. And definitely stick around until the very end. We've got a question for you to chew on.
Right. And just to note, all the sources we're using for this analysis, they're linked down in the description for you.
And hey, if you find this kind of deep dive valuable, we'd really appreciate it if you subscribe to the Stock Analytics AI YouTube channel. We do more of these explorations regularly.
Okay, let's get into it.
All right, Chapter 1, Business Understanding. First thing that jumps out, FOXO seems to have done a major pivot, right? They started out all about epigenetics, but now it looks like healthcare services are the main game. What happened there?
Yeah, that's spot on. The big shift really came from some key acquisitions they made back in 2024. So now their main revenue, it's coming from this healthcare services segment. That operates through two main businesses.
Okay, tell us about those. What kind of healthcare are we talking about?
So the first one is Big South Fork Medical Center. It operates as Scott County Community Hospital down in East Tennessee. And importantly, it's got a critical access hospital designation, a CAH.
Okay, CAH. That usually means specific reimbursement rules, especially for Medicare.
Exactly. It affects how they get paid. They provide the essential stuff, emergency room, outpatient services like lab work, radiology, and also inpatient care. Revenue comes from billing patients, Medicare, Medicaid, private insurance. Pretty standard rural hospital model.
Got it. And the other part of the healthcare segment?
That's Myrtle Recovery Centers, also in East Tennessee. It's a 30-bed facility, and it focuses on behavioral health.
Behavioral health. Okay, so like addiction treatment.
Yeah, things like inpatient detox, residential treatment, and also outpatient programs like medication-assisted treatment and OBOT, office-based opioid treatment.
Yeah.
Similar model for revenue patient care services, mostly paid through in-network insurance contracts.
And Myrtle seems to be doing pretty well lately. I think that might be linked to that big stock jump we saw.
It seems like it. They've reported some pretty good milestones. Treated over 400 patients, logged more than 5,000 care days since August 2023. They're even projecting hitting 10,000 care days by the end of 2025.
Wow, okay.
And they mentioned keeping occupancy over 75% this year. So yeah, that kind of positive news from an operational standpoint, that likely fueled a lot of that market excitement.
Makes sense. So they're clearly pushing on the healthcare side. I saw mentions of maybe more acquisitions too.
Yes, definitely part of the strategy. They've got non-binding agreements for 2 assisted living facilities down in Florida. That's reportedly a $60 million potential deal. And also for a company called Vector Biosource Inc., which deals with information and biospecimen sourcing. So acquisition-led growth is clearly a big part of their plan right now.
Okay, so healthcare is the focus now, but what about the original business? FOXO Labs, epigenetic stuff, is that just gone?
Not gone, but definitely shifted. Yeah. Historically, yeah, FOXO Labs was all about using epigenetic biomarkers, AI, targeting the life insurance industry. They wanted to use saliva tests for underwriting, longevity insights, that kind of thing.
Yeah, I remember that.
The strategy now is more about monetization of what they've already built.
Monetization? Okay, break that down. What did that actually mean for FOXO?
It means they're looking for ways to get value from their existing assets. They have this epigenetic database data from over 13,000 people, plus their own AI health insights. So potential routes could be maybe launching a direct-to-consumer product. They used to talk about the Vithar AI health coach.
Ah, yeah. Haven't heard much about that recently, though.
No, updates have been pretty scarce on that one. Other options could be offering bioinformatics services to other companies, maybe forming strategic alliances, or even spinning off the whole epigenetics division eventually.
But looking at the money, the actual revenue, it doesn't sound like epigenetics is bringing much in right now.
You are absolutely right. Fiscal year 2024 figures are stark. Healthcare brought in over $4 million in revenue.
Okay.
The Labs and Life segment, that's the epigenetics part, contributed about $32,000.
Wow, $32,000 versus $4 million. That's a huge difference.
It really highlights how fundamental that shift to healthcare has been for their actual income.
So looking at their 2024 overall financials, that $4 million plus from healthcare is basically keeping the lights on. And the CEO, Seamus Leganin, his background is interesting, right? He came from Renova Health, the company they bought these healthcare assets from. That feels important.
It's very relevant. Mr. Legan was CEO of Renova Health, and these acquisitions, Myrtle, the hospital operator, they were explicitly done to give FOXO an immediate, desperately needed revenue stream.
Desperately needed because?
Because their 2024 annual report, their 10K, included a going concern warning.
Okay. That's never good.
No. For you, the listener, that's not just accounting jargon. It means there are substantial doubts the company can actually continue operating without getting more cash quickly. It signals a real risk that the company might not meet its financial obligations.
Which could potentially wipe out common shareholders, right?
Yeah.
Regardless of any positive news flashes.
Exactly. It's a serious warning sign about the underlying financial stability.
So, going concern, definitely a major issue. If we sum up what FOXO is today, then it's mostly an owner and operator of these two healthcare facilities making money from patient services.
It's the reality, yes.
And the epigenetics part, while technically still there, isn't really driving the bus financially right now.
Precisely. They've effectively become a healthcare services company in practice. Even though they might still talk about being a technology platform from their history, the money today comes from traditional healthcare.
Okay, that clarifies the what they do part. Let's move to Chapter 2. Management evaluation. We mentioned CEO Seamus Legan and his Renova connection. What else should we know about his background?
Well, he has over 30 years of experience, apparently in startups, turning around distressed companies. A lot of focus on healthcare, M&A, raising funds. But the most directly relevant part is his time as CEO of Renova Health, starting back in 2015.
Right. And FOXO's main moneymakers came from Renova. How did Renova actually perform while he was CEO there?
It's a bit mixed from what we can see. Renova did show some revenue growth during his time. However, it also had significant financial problems, a lot of debt, needed restructuring.
Okay.
And historically, Renova's stock performance seems to have been, well, pretty poor, led to significant shareholder value erosion. It's also worth noting they reported negative equity in the past.
So experience with growth, but also with serious financial trouble. What has Legan actually done since taking the helm at FOXO or being involved via Renova?
He's overseen getting those key acquisitions finalized. He managed a pretty significant debt-to-equity restructuring, converting debt into preferred stock, which did help FOXO's equity position on paper and help them get back into compliance with the NYSE.
Okay, that restructuring is important.
Yes. He's also reported that positive operational progress at Myrtle we mentioned earlier. And of course, he led them through filing that 2024 10K, the one with the going concern warning. Plus, the 1-for-10 reverse stock split back in April 2025, also for NYSE compliance.
So definitely busy. Given Renova's own struggles, does his experience there make him a good fit for FOXO's current situation? I mean, navigating distress.
You could argue his background shows he knows how to operate in tough financial spots, how to restructure things. He did keep Renova going and eventually sold off these key assets that are now FOXO's core. Now he's facing a similar playbook at FOXO. Turn around a company with hardly any prior revenue, a big shareholder deficit, NYSE compliance issues.
In these turnarounds, communication is key, right? How have they been on transparency under Legan?
Well, they do put out press releases for updates, SEC filings, operational news like the Myrtle milestone. But just a big but. Their official website, FOXOtechnologies.com, including the investor relations part. Multiple sources report it's been inaccessible for a while now, even after they mentioned fixing it up back in January 2025.
Wow. That's not great for a public company, no functional website.
It raises serious questions about transparency, definitely. And finding consistent contact info for investors also seems tricky.
That website issue is troubling. Now, Logan is CEO of FOXO, but also still CEO of Renova Health, right? And Renova has this big controlling stake in FOXO. That sounds like a potential conflict of interest.
It's a major point to consider. While there's no direct proof of anything unethical, these related party transactions with Renova Health Inc., RHI, are complex. And yes, RHI, where Ladun is CEO, effectively controls FOXO.
How? Through common stock.
No, through Series A preferred stock. This isn't like your regular common stock. This preferred stock gives RHI majority voting rights.
Majority voting rights, so they can basically call the shots.
Pretty much. They have the power to make key decisions, elect directors, potentially even if most common shareholders disagree. This structure inherently creates a risk that decisions might favor RHI's interests, which might not always align perfectly with what's best for FOXO's common shareholders. You, as an investor, really need to weigh that potential conflict.
Absolutely, and it's worth remembering the previous management, too, before Lagon. Sounds like things weren't great then, either.
That's fair. After their SPAC merger, the company's stock price just collapsed, dropped something like 95%, huge loss of shareholder value under that prior leadership. So Lagon definitely inherited a company already in deep trouble.
So the big question for management, are they honest, capable, and focused on all shareholders, especially common ones? Sounds like it's not a simple yes or no.
Not at all. Honest. No direct red flags for dishonesty, but the website issue is a transparency problem, and that RHI control structure needs real scrutiny regarding fairness to everyone. Capable. Lagan's background in turnarounds and healthcare M&A fits, and the Myrtle progress is maybe a positive sign, but that going concern shows the massive challenge ahead.
And shareholder-oriented, specifically for common shareholders.
That's where the biggest concerns lie, I think. The governance structure heavily favors RHI via that preferred stock. The reverse split, while for compliance, is often seen negatively. And they filed an S-1 registration statement for the resale of shares underlying some preferred stock that benefits the selling preferred holders, could dilute common stock, and the money doesn't go to FOXO itself.
Right. So when Lagan talks about shareholder value, you have to ask which shareholders, given the structure.
Exactly. And his track record at Renova didn't exactly end well for their common shareholders either. It's a critical point.
Okay, that complex management and ownership picture leads us straight into Chapter 3, financial health. We've touched on bits, but let's really dig into the numbers as of May 6th, 2025.
Right, starting with market cap. Before that big intraday jump, FOXO was tiny. Market cap somewhere between, say, $2.6 and $3.4 million.
Yeah.
That's based on the closing price of $2.7225 and the share count after the reverse split.
So firmly in micro cap, maybe even nano cap land. High risk, high volatility expected.
Definitely. And profitability. Price to earnings ratio?
Given the losses, probably not meaningful.
Yeah, exactly. It's NM, not meaningful, or just deeply negative.
They had a net loss to common stockholders over $13 million in fiscal 2024. So a PE ratio doesn't tell you much useful here. Any positive PE you might see listed somewhere is likely just wrong.
But revenue growth looked impressive purely because of the acquisitions, right? Yeah, a huge jump on paper. From only $145,000 in FY 2023 to over $4 million in FY 2024. Almost all of that is the healthcare businesses kicking in. Management has put out projections for more growth, maybe $20 million plus annually from what they have now, potentially $50 million in 1-2 years with more M&A. But those are just projections for now.
Okay, $4 million in revenue, but how much of that actually makes it down the income statement? What about profit margins?
Well, the gross margin from the healthcare side was decent, around 38.7%. But once you factor in operating costs, the operating margin was about negative 191.6%. And the net margin was even worse, around negative 306.2%. Their operating expenses are just really high compared to the revenue driving those big losses.
Yeah.
Getting profitable means they need way more revenue or major cost cuts, or probably both.
And the debt situation, you mentioned the restructuring into preferred stock. How does the debt to equity look? Remind us what that ratio tells you.
Right, debt to equity basically compares what a company owes to what it owns, its equity. It's complicated here because of those conversions. It did improve their equity number on the balance sheet by turning debt into preferred stock. But remember, as of September 2024, they still had a shareholders deficit of over $17 million.
So less than zero equity.
Right. One source listed a DE ratio of 0.81, but it's hard to know the timing or basis for that. The key thing is they still have significant debt, plus these preferred stock obligations, which act a bit like debt and have priority over common stock. And that going concern warning really emphasizes the risk around their ability to pay their bills.
Free cash flow crucial for a turnaround. Are they generating cash?
Nope. Consistently negative free cash flow. They just burn through cash because of operating losses. They rely on outside funding to keep going. Loss from operations in 2024 was over $7.7 million, net loss over $12 million, and their own S1 filing says they need more financing beyond December 2025.
Okay, and price to book. Measuring market value against accounting value. One source had it below 1.
Yeah, one source said around 0.6. Suggests the market values the company below its stated book value. But given the history of losses, the going concern, a recent $1.85 million asset impairment charge in 2024, you have to question how reliable that big value figure really is. Their return on equity for the last year was also abysmal, like negative 17.54%.
So let's hit the key question directly. Is FOXO profitable with a strong balance sheet right now?
Definitive no on both counts. Significant, consistent losses. And no, the balance sheet is not strong history of deficit, significant ongoing obligations, debt and preferred, major liquidity concerns shown by that going concern warning.
What about earnings consistency? Not volatile, just consistently bad.
Consistently negative, yeah, not just volatile. FY 2024 lost $12.04. FY 2023 lost $26.05, even higher before that. No trend towards profit yet. And dividends for common shareholders, forget about it.
Right, not happening anytime soon.
There are even undeclared preferred dividends that have priority anyway.
And finally on financials, that debt again, excessive.
Yes, history of high debt. Even after restructuring some into preferred equity, they still have notes payable, related party payables.
Yeah.
And they explicitly say they need more cash. The going concern just hammers home the risk tied to their debt load.
Okay, so the first half paints a picture. A company making a huge shift, bringing in real revenue from healthcare, but still facing enormous financial hurdles and a complex ownership structure. We'll take a quick break and be right back for the second half, market sentiment, ownership deep dive, risks, and our final thought. Stay with us.
Welcome back to the Deep Dive, analyzing FOXO Technologies. We're into the second half now. Let's kick off with Chapter 4, Market Sentiment. How is the market generally feeling about FOXO stock?
I'd say the overall feeling is highly speculative, very volatile. That's pretty standard for a microcap trying to pull off a turnaround.
Right, like that May 6th surge showed. Huge reaction to positive news. Exactly. It highlights how sensitive the stock is to any bit of good news, like the progress at Myrtle Recovery Centers. But on the flip side, you have that going concern warning hanging over it, which definitely makes investors cautious. The reverse stock split also sends mixed signals, often seen negatively.
Are there any analysts actually covering FOXO, giving price targets?
Pretty much non-existent, which, again, is common for stocks this small and speculative. One source just flat out said NA, not available for ratings or targets. And some recent technical analysis we saw actually leaned bearish.
So bursts of excitement on news, but underlying caution and not much professional analyst attention. What about short interest? Are people betting against it?
Short interest is moderate, not extremely high, but the cost to borrow shares to short them, that's incredibly high.
Meaning it's expensive to bet against FOXO.
Very expensive. Suggests it's a risky short trade. The days to cover is low, meaning a short squeeze might not last long if it happened. But with this volatility, sharp moves are always possible. We also saw some fails to deliver back in April, which sometimes hints at share availability issues and options, likely very pricey due to the volatility.
Okay, a speculative stock with some costly friction for short sellers. Let's pivot to Chapter 5, ownership structure. Who actually owns FOXO?
Well, institutional ownership is pretty low, again, typical for microcaps. Fintel data showed about 18% held by institutions like UBS, Jane Street, Savvy Management. But the average amount they allocate to FOXO in their portfolios is tiny. Suggests small speculative bets. Another source had institutional ownership even lower, like 2.7%.
If insider ownership sounds high, especially with the CEO, Seamus Lagan, and his Renova link.
That's the key part. Yes, insider ownership is significant, though pinning down an exact percentage is tricky with conflicting sources. The critical factor is CEO Logan, also being CEO of Renova Health Inc., RHI. RHI is a major shareholder through that Series A preferred stock we discussed.
The one with the majority voting rights.
Exactly. Former CEO John Sabs was also a large holder individually. Interestingly, looking at recent open market trades by insiders, there were 0 buys and 0 sells reported for common stock. But that doesn't capture things like preferred stock conversions or grants. Filings do show RHI's holding, and that some former officers reduced their stakes last year. Savvy Management also pops up as a significant holder, active in preferred stock deals too.
And this concentration, especially RHI holding those powerful preferred shares, It really impacts corporate governance, doesn't it?
Profoundly. RHI effectively controls FOXO because of those majority voting rights.
Right.
FOXO's own S1 filing is explicit. RHI controls director nominations and elections.
So for you, the listener holding common stock, your vote doesn't carry much weight.
A very limited weight, yeah.
Yeah.
RHI can override common shareholders. This creates that clear potential conflict of interest we talked about.
Right.
Decisions might favor RHI, not necessarily all facts of shareholders equally. And Ligon, being CEO of both companies, just magnifies that governance risk. Potential self-dealing, prioritizing RHI, it's all laid out as a risk factor in their S1.
Okay, a critical point for anyone considering this stock. Your voting power is minimal, and a related party calls the shots. Let's move to Chapter 6. Risk assessment using a SWOT framework, strengths, weaknesses, opportunities, threats.
All right, let's start with strengths. They do have revenue-generating assets now. Hospital, a CAH, which helps reimbursement, and Myrtle, showing good momentum. They have Legan, who has experience in turnarounds in healthcare. They still own that proprietary epigenetic tech and data of FOXO Labs. The balance sheet got a partial fix with a debt-to-preferred swap, and they're targeting underserved markets.
Okay, some positives. Now, the weaknesses. Feels like we've hit several big ones already.
We have. The going concern warning is top of the list. Huge red flag about viability. Then there's the history of big losses, the tight liquidity, needing more cash, the high debt burden, even including the preferreds, the low market cap, making the stock super volatile. Rely on assets bought from troubled Renova is also a weakness.
And the ownership structure.
Yep, complex control by RHI. Plus, their limited scale, lack of diversification, and that inaccessible corporate website, all significant weaknesses.
All right, what about opportunities? Where could things go right for FXO?
Well, growth in behavioral health via Myrtle is a clear one. Expanding healthcare through more acquisitions, if they can fund them. Actually, monetizing the epigenetics division, that's still a potential opportunity in a growing market, whether through products like VITHAR, services, partnerships, or a spin-out.
Any synergy between the two sides, healthcare and epigenetics?
It's talked about, but unproven. Could be an opportunity down the line. Also, just improving efficiency at the current facilities, and maybe attracting more investors if the turnaround story gains traction, like we saw glimpses of on May 6th.
Okay. And finally, the threats. What could derail this?
Biggest one is probably failing to get more financing. They need it to survive. Execution risk is huge, too. Can they actually pull off this turnaround and integrate acquisitions effectively? Then there's the tough industries. Healthcare and biotech are highly regulated, very competitive.
Economic factors.
Yeah, an economic downturn could hurt patient volumes, reimbursements. They're also very dependent on key people, especially Legan. There's the ongoing risk of dilution for common shareholders as they raise capital, competition in their local markets, failing to actually make money from the epigenetics side, and even external things like you mentioned, potential U.S. tariffs increasing costs for medical gear or supplies.
Right. Those tariffs could just add more pressure to their already strained finances.
Absolutely. Any cost increase is a problem when you're already losing money.
Okay, let's pull this all together. Chapter 7, a brief conclusion, and then our final question for you.
So, FOXO Technologies. It's clearly a high-risk, highly speculative situation. The company's in the middle of a massive transformation. Getting the healthcare assets brought in much-needed revenue, but huge challenges remain. That going concern, the ongoing losses, the debt and preferred obligations, the tricky governance structure.
That May 6th surge shows the market can react strongly to positive signs.
True, but the overall path forward is still very, very uncertain.
Which brings us to our end hook reveal, a question we want you to really think about. Given the controlling interest held by a related party, RHI, which has its own complex financial past, and given the significant potential for more dilution of common stock, what does shareholder value truly mean in the case of FOXO Technologies? And maybe more importantly, for whom is that value ultimately being created?
That's the million-dollar question, isn't it? Something any potential common shareholder needs to grapple with here.
So to quickly recap our deep dive on FOXO, it's a company that shifted its business model entirely towards healthcare services. This provides revenue, yes, but the financial foundation is shaky going concern, losses, debt, and the ownership structure with RHI's control is a major factor impacting common shareholders. It's a speculative turnaround play, full of complexity.
It really highlights how crucial it is to dig into the details with microcaps, especially turnarounds. You have to understand who's in control, the related party issues, The power dynamics are just critical.
Absolutely. If you found this kind of in-depth analysis helpful and want more explorations like this one, please do subscribe to the Stock Analytics AI YouTube channel. We'd love to have you follow along.
And please, always remember, this analysis is based on information available as of May 6th, 2025. It is absolutely not financial advice. We used artificial intelligence to help process the sources for this deep dive.
We strongly encourage you to do your own independent research and due diligence before making any investment decisions. You can find links to all the sources we talked about today down in the description. Thanks for tuning in.